Okay, good afternoon, everyone, and hello to you all wherever you are around the world. And welcome to what is going to be the final webinar of the season before many of us will go on holiday in August. And this week or this month, we'll be looking at the hydrocarbons and power projects markets together across the MENA region. My name is Edward James. I'm the head of content and research at MEED, and I will be giving you this 30-minute presentation today, after which I will be attempting to answer your questions. And as ever, if you do have any questions about anything that you see today, please submit those in the Q&A box you can see in your Zoom bar there. We do get a lot of questions, so and I do attempt to answer most of them. So please get your questions in when you can. So as I said, this presentation is about 30 minutes long, followed by the Q&A. And as ever, we are recording the presentation so that you'll be able to watch it again in your own time. We'll be uploading it onto YouTube and then sending you the link direct to your emails if you've registered for the webinar today. At the same time, you should also receive a PDF copy of this presentation sometime today, as long as you've registered. And again, you'll be able to share that and look at it in your own time with your colleagues, because in typical webinar fashion from us here at MEED, we're providing you lots of invaluable data that you won't be able to find anywhere else based on our proprietary MEED and MEED projects database. And indeed, I will just go and explain a little bit about those two products. In case, for those of you who are not familiar with MEED, we have two principal online platforms. One is MEED.com, which is our news, features, and analysis service, updated every day with the latest breaking news and exclusive information on the macroeconomic, geopolitical, and projects environment in the MENA region. And our second platform is MEED Projects, which is our projects tracking service covering the Middle East, Africa, and Central Asia. We've got something like 15,000 live active projects at the moment, worth several $1 trillion. And if you're interested in tracking individual projects one by one, every project in the region above $10 million, including the contractors, the consultants, the scopes and budgets and timeframes, bidders lists and so on, then MEED Projects is an invaluable tool for your business. So check them out, please, MEED.com and MEEDprojects.com. I know many of you are using them and are subscribers already, but if you are not, then please check them out. And this webinar is tied in with our latest MENA Hydrocarbon and Power Projects 2024 report, and it's an exclusive report, more than 500 slides in PowerPoint format, full of data and information and analysis on the hydrocarbon and power project sectors in the MENA region. That's from Morocco all the way to Oman. We look at each country individually, as well as doing deep dives into various technology trends, particularly AI and carbon capture, as well as providing a macroeconomic and risk indices assessment and overview for the region as a whole. For those of you on here today, there is a $600 discount on the usual price of $4,000. You can see the code there, webinar 600. And if you visit buy.me.com, you can purchase it from there. Or alternatively, you can scan or click the QR code on the bottom right-hand corner to find out more information. These are exclusive reports. They are the best reports in the region on these segments and the projects market as a whole. And they're well worth checking out if you have an interest in the two markets. All right. Let's start, and as usual, I'll start with taking a look at the historical numbers and 2023 performance, both in terms of the overall market across all sectors and then in terms of the individual hydrocarbons and power sectors. So we can see here from 2014 to 2023, the last decade, that there have been between $100 billion and $250 billion of contracts awarded each year in the MENA region. The exception is 2023, which saw a record high value of work awarded, $278 billion worth of work awarded in the MENA region in 2023 across all sectors. If we then look at narrow down into the GCC and look at those 6 states in particular, we can see there was another record year for them, $236.5 billion worth of work awarded, well in excess of the previous record seen in 2014, and pretty much double the figure from 2022. So it was a record performance all round for the GCC and for the MENA region, which is great news, of course, for everyone. Now, let's narrow down into the hydrocarbons and power contracts awarded rather than just all sectors as a whole. On the left-hand side, you can see that Saudi Arabia and UAE, when you're taking all sectors, they were record years, more than $100 billion for Saudi Arabia. That's the highest by any country in the region ever recorded. And then the UAE, which is the second highest value ever recorded. And you can see the big jump between 2022 and 2023. The market really went absolutely berserk last year, huge contracts awarded. And indeed, on the right-hand side, we can see why a lot of that was, and that's not just record spending in construction and transport infrastructure, but we've also seen last year huge record spending on hydrocarbons and power. You can see just how much that was. You can see in Saudi Arabia, by far the largest market in these two segments, more than $45 billion worth of oil and gas and power sector contracts awarded. The UAE too, also far ahead of previous years, close to $35 billion. And these two are well ahead of other markets, maybe with the exception of Qatar. But you can see this is where most of the action lies, in those two nations, followed by Qatar. So what happened last year? Why did we see such record growth, such record performance in the value of contracts awarded in oil and gas and power, and indeed overall? And really, that's down to a convergence of both high construction and transport spending, but also very high oil and gas and power sector spending. You'll see here from the UAE, for example, that ADNOC tends to spend a lot in a 12-month period in some years, and then very little in other years. A lot of that depends on a 5-year strategy for a particular company, but also depends on EPC prices and ensuring that the investments are made when there is the best economic environment and contracting environment to do so. Likewise in Saudi Arabia, with Aramco pulling ahead with a large number of very big investments, which we'll see in shortly in this presentation. It also went ahead with a huge investment last year. And then in Qatar, well, it's been dominated by the last couple of years by the LNG program, and indeed last year saw the two biggest contracts awarded in the region for the LNG trains expansion. Just as a reminder, this presentation is being recorded, so you'll be able to look at it in your own time. We will be sending you a link or the file itself. For those of you who've registered, you will receive in your email, you'll receive a link and the PDF to the PDF presentation itself. And please also don't forget that there is going to be a Q&A at the end of this presentation. So please submit any questions you might have in the Q&A box in your Zoom menu bar. Okay, as I said, so what were the big contracts awarded last year? Don't forget, all this data is bottom up. We are tracking every single contract across all sectors in the region. And as a result, we are building these numbers and columns that you saw in the previous graphs based on individual contracts, sometimes hundreds, sometimes thousands, depending on the country and the sector. So these are some of the biggest ones across the power and oil and gas market awarded last year. As I said, we had the LNG trains in Qatar expanding up to 127 million tons a year to make Qatar again the world's largest LNG exporter. We finally saw more than $16 billion worth of contracts awarded on the Hale and Ghasha sour gas development, long awaited. Had some tenders before on this. We've had some cancellations on this before. Finally, we've seen it awarded. We also saw the award of their MERAM project, $3.6 billion for ADNOC in Abu Dhabi. Likewise, we saw major contracts awarded on the Jafurah gas project as well. Several packages there worth, I think, more than $7-8 billion. We also saw the ethane cracker being awarded in Qatar, world-scale petrochemical complex, and of course, a range of other major projects. The largest power one was the RAS 2 solar PV power plant, which, if I'm not mistaken, is the largest single site solar plant anywhere in the world. And we also saw 4 gas-fired IPPs awarded in Saudi Arabia. Again, going back to this baseload capacity requirement, which I'll be touching on a little bit later in this presentation. So, dozens of major contracts awarded, at least 25 individual EPC contracts worth more than $1 billion awarded last year, then a multitude from $10 million and above. So now looking at the largest contractors, both in oil and gas and in power. And you can see here on the left-hand side, dominated by international EPC contractors with some notable exceptions. You'll see here that Saipem is the largest oil and gas contractor by value of work under execution in the region at 18.9, nearly $19 billion, closely followed by Maer Technimont, petrochemical specialist, but also one of the largest single contracts ever on the Hail and Ghasha project too. Technip Energy also has been very successful over the last couple of years, $16.5 billion. And then we have NPCC out of Abu Dhabi. Now Abu Dhabi owned, it's got something like $12.7 billion of work under execution. Is a huge success story for the region and is by far and away the region's or GCC's largest contractor in the oil and gas space. Then we have familiar faces, TR from Spain, Samsung Engineering out of Korea, India's Larsen & Toubro, Hyundai E&C from Korea, and so on. The other big Middle Eastern contractors are MP out of Egypt, CCC, which is Athens-based but has its origins in Jordan, Lebanon, and also Petrofac. One is London listed, but it's also has major operations in Sharjah. In the power sector, we have Larsen & Toubro right up there, $12.8 billion, renewable energy generation project specialist, but also very, very active in the transmission and distribution market. SEPCO 3 out of China is in second place, followed by Samsung C&T, Orascom from Egypt, CEEC, El-Sawadi from Egypt, NCC from Saudi Arabia, and so on. And you can see here, on the power side at least, the Chinese contractors are becoming more and more active, as they are indeed across all sectors in the region. So watch that space with the Chinese contractors as they're becoming more and more successful. If we are to calculate both of those data sets together, then Larsen & Toubro across both segments is the largest single contractor by quite a large margin. It's also active in water and construction sectors as well. So we've seen the contractors. What about the clients, top clients? No surprises really that Saudi Aramco is the largest single client in the region. It's the world's largest oil and gas producer, close to $80 billion of work underway, followed by Qatar Energy LNG, which is the LNG project company, subsidiary of Qatar Energy, more than $40 billion on its LNG expansion program. Then ADNOC, self-refineries company out of Iraq, various ADNOC operating companies, gas processing, ADNOC offshore, ADNOC onshore, and then a range of the other NOCs in the region. And indeed, if we're looking at these, you can see quite clearly that the oil and gas sector in the region is dominated by government-owned entities. Most of them are funding the projects themselves. There's no shortage of cash amongst these companies, as you might expect. And so very comparatively little private sector involvement on the client side in the region, as it historically tends to be. On the power side, fairly similar picture in that the major clients are government entities or owned by the government in one way or the other. Saudi Electricity Company, Saudi Power and Procurement Company, the two leading firms, Ministry of Electricity in Iraq, G-Coal out of Libya, Sonogas from Algeria, DWEL from Dubai, and so on. However, that disguises the fact that almost all new power generation capacity is being implemented on an IPP basis, that is long-term concessions on a BOT or BOO basis, where the private sector wins the bid and is brought in to finance, build, and operate power generation facilities for up to 25 years. And that is the norm now in the GCC, certainly. It's becoming more influential in Iraq too now, and in other markets such as Libya, more risk, slightly higher risk markets, they're still done on an EPC basis. So while the actual tenderers of these projects are government, the actual implementation and financing of the projects are done by the private sector in the power space. Just a reminder, for any questions you have, to put them into the Q&A box. All right, first poll question of the day. Want to gauge your feelings on the market. And the first question is, which of the following industry segments do you see the MENA region spending the most on until 2030? So is it the oil sector, the gas, including LNG, petrochemicals and chemicals, including hydrogen, thermal power generation, that's oil and gas fired power, renewable power generation, that's solar or wind or hydro electricity energy, or is it power transmission and distribution, overhead lines and substations? Please put in your answer. We'll be keen to get your thoughts. So we have 370 attendees currently, and we've got about 240 responses, so a very good sample size. And it's broken down as follows. We have leading the way, and it's a close run thing, gas, including LNG, 29% split. Petrochemicals and chemicals, including hydrogen, 23%. Renewables, 27%. And then oil, followed by T&D, and then followed by thermal power generation at just 2%. Very, very interesting. So it looks like, and this ties in with what we're seeing project-wise, that there's a lot more focus over the next few years on gas for power generation and for export. Petrochemicals and chemicals, of course, going down that value chain. I'll talk a bit about that later on. And also, of course, the emerging hydrogen sector too. And then renewables, of course, as we know, net zero targets, renewables become increasingly more affordable and reliable. And there's much less appetite these days for oil and gas power generation. I'm a little bit interested on the power transmission distribution because some of the investments are huge in that on that segment, but we'll talk about that in a bit. Thank you very much. Very interesting results. Okay, next slide. Okay, so that was the last couple of years, last decade or so, and looking at last year as well. Excellent year, record year for everyone in terms of contract awards. If you're in the supply chain, or subcontracting chain, you will start seeing all that start flowing into work and orders over the course of the next 18 months to 2 years, once the detailed engineering phases are complete and work starts to break ground. But what about the future? Okay, so before we look at individual segments and data, let's take a look at some of the major drivers for oil and gas and power market activity, because it's important to understand those when looking at the outlook for the future market. So I think a range of different drivers. Some of them are focused on individual sectors, others are shared across all of them. But I think one of the key factors over the last decade, certainly behind investment, is been high population growth. And naturally, that's certainly spurred real estate spending and social infrastructure spending. But if you think about it from the utilities perspective, then more people means more electricity demand, which means more water demand, and means more gas demand to fire these projects. So increasing population over the last 10 years certainly has resulted in a big jump in the requirement for electricity. And so governments over the years have been investing huge amounts, billions and tens of billions of dollars in power generation, but then associated transmission distribution, and also in gas production projects to be able to fire and provide fuel for these power plants. Now, we are moving into a more renewable world now. However, electricity demand is still going to grow. And as a result, we're going to continue that need for renewable energy. And as also the economies grow, we're also going to need more investment in hydrogen, as well as that becomes the feedstock of choice for any gas turbine installed assets at the moment. At the same time, as I just mentioned, we have the emerging market, which is hydrogen, both for conversion into ammonia for export, but also for domestic consumption, mainly for power plants. Most gas turbines installed already in the region can also use in a fairly easy manner hydrogen, and as a result, we are going to see some big investments in green and blue hydrogen over the next few years. I think there are more than 70 hydrogen projects alone in the MENA region. Of course, not all of them are going to happen. Hydrogen is still fairly expensive to produce comparatively to other feedstocks, but nonetheless, it is a fast emerging sector and interlinked with both the hydrocarbons and the power space. Of course, another big driver for markets as a whole, in projects market as a whole in the MENA region is high oil prices. If oil prices remain high, then governments and clients have more money to spend on their projects. Conversely, if oil price was to drop, then there will be less money to spend on these projects. And of course, we are talking about sectors which are predominantly funded by the state or state-related entities. So that's very critical indeed. Although one can argue that there is a bit of detachment when it comes to hydrocarbon spending, because NOCs like Aramco, Qatar Energy, or ADNOC are not thinking necessarily about the oil price now, but they're thinking about oil demand and oil prices in 5 years' time, or developing that value chain. And again, it's all about enhancing the economy and about strategy in the longer term rather than the oil price right now. Likewise, on the power sector, governments really don't have a choice. If power demand is growing, you have to invest in power production. You can't have power demand outpacing power supply. At the same time, we're seeing now as a major driver slightly more aging fields, which have been producing in many cases for 50, 60, 70 years in the region. As they age and the available amount of easy oil dries up, then increasingly we're having to see more enhanced oil recovery techniques employed. And also we are starting to see NOCs tap into unconventional resources, a bit like we just saw with Jafurah, and also resources that may not have been tapped into before, such as offshore assets, which tend to be a little bit more costly to develop. So that is also a key driver. As of course is when it comes to power, net zero targets and the need to develop renewable energy. Almost all future power generation projects in the region will be in the form of renewables. And at the same time, for existing industrial and oil and gas assets, then there is the need to capture the carbon emissions and store them. And another emerging segment we're seeing rise quite rapidly as the technology developments, and that is battery energy storage, which of course is a key solution to the issues around renewables, i.e. during the night when there's no solar power, or when there are days without a lot of wind. On the petrochemical side, there is very clear strategy now for the NOCs to develop the value chain, taking the oil and gas they produce and maximizing their value by taking them all the way down to petrochemical production, rather than just exporting them either refined or unrefined. By doing so, not only do they extract the most value, but they also create the most jobs and help develop associated industries closer to home. And finally, as I mentioned, there's been a big focus in recent years on offshore developments, a segment which may not have been as developed over the previous few decades than it is now. Okay, now we've seen those opportunities and drivers. What about the key challenges? Well, if we look currently, key cost inflation has been a major issue driven by logistics and shortage of materials over the last few years, and that has increased EPC prices. So that's definitely a major challenge. We're seeing, as the market tightens, more limited EPC competition, particularly in the offshore segment, where there are only 6, 7, or 8 maybe capable contractors in that area. That also provides some limitation on pricing. We've also seen, of course, some uncertainty around future oil demand as we reach that peak oil period. And that also creates challenges around making investments now. And of course, all NOCs have to reduce their emissions and have looking towards the net zero targets for their countries. So that also adds a particular conundrum for them. We've got increasing costs as a result of having to apply EOR technologies on their projects and employing carbon capture and storage, even though it's for the best. Of course, these are creating additional cost pressures. We also, across all segments, but also in the oil and gas and power markets, we are seeing a stretched supply chain, not just due to logistics issues, but due to many companies being hard hit by the slowdown and payment issues seen between 2015, 16 and 2021, 22 in the region, and the market is still recovering from that. We've still got some issues around the use of hydrogen. At the moment, most hydrogen investments are focused on export, and there is still some way to go before we are seeing some concrete action around the development of domestic networks for power plants to utilize, or indeed vehicles and other industries. And that is something the region is grappling with and will have to resolve, as will load balancing requirements, spinning reserve requirements. We know that renewables are going to dominate the power generation market going forward, but countries still need to be able to balance that load and peak demand periods. So how will they achieve that? Are they going to have to build more gas-fired power production in tandem? Will they go for nuclear energy, or will they put all their money into battery energy storage? We will see. So how is this year progressing to date? 2024, we saw a record year last year. How are we looking this year? Well, the good news is we've seen a large number of very large contracts awarded in the first 6-7 months of the year, which indicates that we should be seeing a similar amount to awards witnessed last year as well. So it's continuing. The major investments, as you can see here, are being maintained, which is great news for the market. First off, we saw a couple of months ago the new LNG export terminal award made by ADNOC. We've also seen refineries and petrochemical complexes being awarded in Iraq. There's been a few awarded over the last couple of years to Chinese contractors and developers, and that's continued this year with the Al4 refinery and integrated petrochemical complex. We've also seen the interconnection between different regions of Saudi Arabia, the overhead lines and converter station. Huge contract for SEC. We're also seeing interconnections between Iraq and Saudi Arabia, Jordan and Saudi Arabia, Jordan and Iraq, and of course, Egypt and Saudi Arabia. So there is a big enhancement in interconnectivity. On the oil and gas side, we've seen upstream and downstream big investments by Aramco in Fadhili, some other contracts awarded on Jafurah, And we've also seen offshore in Qatar, the Ruhr development, a couple of big EPC contracts there awarded. But it's in the power space that we can see some very interesting movements. We've got some massive, some of the world's biggest renewable energy plants being awarded in very quick succession in Saudi Arabia, both by SPPC, but others by the PIF directly, and by SEC, as you can see, Haden, Muaya, Khashibi as part of the renewable energy program. And Saudi Arabia recently announced some very ambitious targets for 140 gigawatts of renewable energy by 2030. Very, very ambitious indeed. And this is going to require some 10 to 20 gigawatts a year of renewable energy capacity to be built in the kingdom. So all systems go in the two segments of the market at the moment, which has caused great news. So maybe the question isn't the state of the market or the health or the awards, but maybe attention needs to now turn to delivery and how the market is going to be able to deliver this very rapid increase and ramp up in projects across the board. Just a reminder, submit any questions you might have on the presentation. I'll try and get round to answering them at the end of this presentation. We'll have a Q&A session, and also that this presentation is being recorded, so you'll be able to watch it in your own time once we've uploaded it to YouTube, and you'll also should receive a copy of this presentation in your inbox fairly soon. Now, in terms of the oil and gas projects market, in terms of known, planned and unawarded projects in the MENA region, we've got about $391 billion worth of projects, and you can see the split here. You can see that just under $100 billion of contracts are in the petrochemical space. Then gas pipeline, 66 billion, upstream oil, 63 billion, downstream oil, 47, gas downstream and upstream, some 70, $80 billion, and so on. And in terms of the status of these projects, we've got 8% of that, $391 billion in bid evaluation of bids have been submitted, and a further 8% of that figure with tenders either out to bid or pre-qualification ongoing. Further, a bit more than 50% are in design or feed stage, or 30% of that in study. Now, it's important to recognize, I think, here, when it comes to oil and gas future spending, that there is not a great deal of feasibility. NOCs like Aramco, ADNOC, Qatar Energy don't provide a lot of visibility on their long-term spending plans, and therefore what is going to be invested is really limited to a couple of years at most. So when we are comparing this, say, with the power market or the construction market, it does tend to be fairly underestimated when comparing those with other segments, which is important to bear in mind. So the real number in terms of the longer term outlook is likely to be a lot higher. On the other hand, when it comes to power, there is quite a lot of visibility, and that's because countries do need to have long-term demand forecasts and therefore prepare the pipeline of power projects well in advance, and therefore you do get good visibility of the future planned projects certainly in most MENA states up to 2030 and even beyond. And at the moment, we can see a little over $450 billion of known, planned and unawarded power projects in the region, ranging from generation all the way through to substations and overhead lines, transmission distribution. We can see that for the first time, really, solar power is the largest chunk of future spending. Again, this just recognizes the lower economic cost now of building renewable energy projects, solar power in particular, the strong irradiation levels in the GCC, and the fact that countries are now trying to reach their net zero targets. And so solar power is absolutely critical for them to achieve that. At the same time, interestingly, we're seeing very strong investment in nuclear power. We've heard recently about Abu Dhabi potentially building 4 more reactors alongside its Baraka nuclear power complex near the western border with Saudi Arabia. We've also seen Saudi Arabia look at its own nuclear power program, is negotiating with countries, 5 or 6 countries for the technology and investment in that. That will be running in the tens of billions of dollars. Egypt too is engaging with a nuclear power program as well, and it's possible we may see other countries also come on board. The nuclear energy sector can be viewed as being a sort of emission-free resource, help reach net zero goals, but it's also very useful for baseload capacity as well. So it's being viewed as perhaps in some countries an optimum solution. Wind power is not as popular in the region as solar. We've got some $65 billion of projects in the wind segment in the region. It's not very suitable for the Gulf Coast, but is much more suitable along the Atlantic in, say, Morocco, but also along the Red Sea coast, where both Saudi Arabia and Egypt and Jordan have some very significant wind power plants. In keeping with our previous poll, oil, gas, thermal power plants taking a back seat really for the first time, just $47 billion of projects in that area, and then more than $50 billion of T&D contracts in the known pipeline in the region. And even hydropower is getting a look in these days, $12.7 billion, mainly in Egypt, Morocco, and countries which do have water resources. But we are now seeing for the first time pumped hydro storage being planned in Saudi Arabia, very substantial. It also resolves some of the energy storage needs. And of course, this builds on the first pumped hydro storage project in the GCC, which is currently being built in Qatar, in Dubai. In terms of future clients, both in the oil and gas space and in the power segment, you can see here Aramco, $33 billion. We have NNPC out of Nigeria in second place at $19 billion, but that's basically a JV with ONIM out of Morocco for the Nigeria to Morocco pipeline, which does appear to be moving ahead, actually, and that will be a very significant investment. We then have Qatar Energy, $15.3 billion, Sonatrach, the NOC from Algeria, $13.7 billion, and so on. Again, important to bear in mind that the visibility of these NOCs projects is quite limited, and therefore these numbers are very much underestimated. As while we know, for example, that Aramco has 99 major projects in the next 2 years, we don't know precise details of what they are or how big they are. So the data tends to be quite limited in that respect. In the power side, we also have some very familiar names like Saudi Power Procurement Company, which is the main power private power sponsorer in Saudi Arabia. Enewa, which is the water and power utility of NEOM, some $21 billion, building some very large desalination and power plants there. Xlinks, which is the UK company which is looking very seriously at building huge solar power project in Morocco and then transmitting the electricity produced directly to the UK. We have Baraka 1, the nuclear power program in UAE, Kuwait's Ministry of Water and Renewable Energy, and so on. Again, most of those are government or government-related entities. What are the big packages in our contracts in the bidding stage right now in power and oil and gas? Well, we have in the lead, we have the Nasiriyah refinery project, long in the market now for about 10 years. But as we've seen with Karbala and Al Fal refineries and a couple of others, Iraq has been able to get some of these refinery projects over the line. And that's out in the market right now. We've got phase 2 of the NFPS in Scope D for Qatar Energy LNG in Qatar. We've got the long-awaited Al Zour North IWPP in Kuwait. The also long-awaited IWPP for Karama in Qatar, and then a range of other key projects such as the Iraq oil export pipeline through to Jordan. We've got the pumped hydropower storage, one of the largest in the world, called Nestor for Enewa, 2.2 gigawatts. We have a gas-fired power plant for Tuila, again about this baseload capacity requirement, 2.5 gigawatts for IWEC in Abu Dhabi. And again, almost all of these, as you can see, are the letters IPP. This means that it's going to be financed and built and operated and maintained by the private sector. Longer term, here we are. These are some of the bigger projects over the next 10, 20 years. The nuclear power program, of course, in Saudi Arabia, which is a government target. And there were lots of hydrogen projects, green hydrogen, blue hydrogen. I have not included them all here just for the sake of diversity. But as I said, there are more than 70 world-scale hydrogen plants in the region. We've got the Nigeria-Morocco pipeline I just talked about. We've got this X-Links massive solar power production and export complex in Morocco. We've got North Field West development, very significant in Qatar, and various other major investments, including the Dora gas field onshore and offshore development, which is heating up and will go to market, I imagine, next year. And a long-awaited petrochemicals project complex in Kuwait as well. So some very significant future oil and gas and power projects coming up. Right, now, question on net zero. And again, across both segments, both carbon capture and renewables. How realistic do you believe the region's net zero targets are? And the volume of renewables and carbon capture projects required every year to achieve them? Are they very realistic, somewhat unrealistic, very unrealistic, or are you not sure? So let's see what the market thinks. Fairly evenly spread so far. Okay. Right, so thank you very much for that. 225 responses, very good sample size. And it's really split neck and neck between somewhat realistic and somewhat unrealistic. So optimistic and pessimistic in sort of equal measure. 16% say it's very unrealistic, the amount of renewables and carbon capture projects required to reach net zero. And very realistic, only 5% of you say, well, 8% of you don't know. Okay, so we're somewhere in the middle when it comes to reaching these numbers. But I think whether it's met or not, it's still a very significant amount of investment required. Thank you for that. We'll have a couple more poll questions before the end of this. All right, now I just want to talk about a couple of strategic themes and intelligence. The first one is AI. Everyone is talking about AI these days. I'm sure many of you are using ChatGPT. It's amazing what it can do. We're finding out all of us individually how it works and some of the potential it's got. And that potential extends into the projects market in a number of different ways. I won't go through all of these. You'll be able to read them in your own time. But whether it's maintenance and predictive maintenance for operations, provided that the right tools and sensors and digital twins are implemented in the construction phase, whether it's for forecasting, whether it's for management of grids, reducing emissions, whether it's for energy storage, AI has an immense number of applications that can transform the industry. One area where AI is still struggling, though, and has been difficult to implement is in the actual construction phase. Yes, there's plenty of potential for AI in procurement, in design and planning, but the industry is still struggling to understand how AI can be better implemented and in things like project construction, efficiency, with the labor force, with plant and equipment, and so on. And that is something that I think the industry needs to work on. And I know that the NOCs around the region and project clients generally are looking at that very seriously. So here we are. We've got broken down our opinions from MEED Global Data on the hydrocarbons and power market and how AI can have a role to play. So green here means it's got a big role to play and companies should consider investing. Orange means that their companies should worth looking at. and red, which doesn't apply here, means it doesn't really apply for them. You can see the different segments: upstream, downstream, equipment for power, EPC, generation, T&D, and end users. And you can see here how AI can assist. AI can assist with decision-making across the different services and segments. I think that's fair to say, in planning software, in procurement, in investment decisions. AI can be a vital tool for efficiencies and helping make those investment decisions. In terms of human AI interaction, maybe a bit more limited in some of the construction aspects. But if you think about AI and things like augmented reality, virtual reality, in terms of, again, procurement and labor efficiency and so on, there is very good potential. And likewise in motion as well, less so in creation. Again, I won't linger on this because a lot of text, you can look at it in your own time. And then let's take some examples of how AI can help in oil and gas. For example, just a couple of examples. For example, upstream, you can use AI to help with the delivery and use of equipment and plant at construction sites. Certainly in terms of drilling paths, LiDAR, and other such technology can be very useful as well. More efficient extraction, increased safety, midstream, again, applying AI to pipeline planning, predictive maintenance, leak detection, and again, with downstream, whether it's in pricing, planning, or predictive maintenance, for example, can be very, very useful. And then AI in terms of manufacturing of key equipment, clearly for quality control and planning purposes during production, safety, and the use of digital twins. Likewise, now for the power sector, again, some fairly obvious solutions where AI can apply: predictive maintenance, forecasting, emissions controls, demand management, supply management, and again, through manufacturing and equipment manufacturing as well. So AI has a big role to play. But my question is, despite everyone talking about it and despite it being having huge potential, are you or your companies actively engaged with AI? Let's get your opinion. Have you already incorporated AI and actively using it in your company? Are you incorporating it? Are you in the process of incorporating it? Are you still at the AI planning stage, planning to use it? Do you have no plans for AI, or are you not sure? Let's see. Okay, so very interesting results here, I would have to say. So when I total it up, a total of 61% of you and your companies, are either still at the AI planning stage of how you can use AI in your business, or you have no immediate plans for AI. So that's a big majority, 60%, more than 60%, despite all the talk, have actually not at this stage actually started to implement or use AI in your business. Now, I have to think it's fair to say the EPC or construction business as a whole is one of the lowest adopters of new technologies. And I think this does have to change generally, just as a neutral observer. It certainly lags behind some other industries like banking or law or manufacturing. So it's very interesting that so many of you, whether you're suppliers or construction companies, are not yet getting on the AI bandwagon. On the other hand, 9% of you, which isn't very much if you think about it, are already actively using AI in your business, and another further 20% of you are incorporating or in the process of incorporating AI into your business. My feeling is, if you are not already considering AI, or if you haven't already started to use AI, you do risk missing out. Okay, and lastly, just on carbon capture, very quickly as we're running out of time, again, just a reminder to submit your questions. Carbon capture is going to be something that's going to be implemented as standard going forward if net zero targets are going to be reached. So that is capturing the CO2 either pre-combustion or post-combustion stage, both in industrial and power facilities, then piping the captured CO2 to either storage facilities on the ground, used for to replace gas as a EOR technology, or reused industrial processes or products. If the hydrogen is extracted during this process, then you can describe it as a blue hydrogen project. So we are going to see, as standard, as I said, over the next 5 years, carbon capture implemented on most greenfield projects, and we are starting to see that in existing assets as well. And it's really where the power market and the oil and gas market interact, as there is a big overlap between them, and there will have to be some coordination between the two industries to make this work. The region at the moment has had fairly few major CCS and CCUS projects implemented over the years. It's obviously a fairly expensive technology to implement. The CO2 value at the moment is not being maximized, but this has to change, and we're already seeing a large number of sort of green steel, blue hydrogen type projects being implemented in the region, and you can see an exponential growth in the number of carbon capture projects. And as the annual capacity grows from about 4.4 million tons a year of CO2 all the way up to 20 million tons a year, five-fold increase over the next 5 years. And then in terms of the projects by country, you've got 10 in the UAE, 7 in Qatar, 5 in Saudi Arabia, 3 in Egypt, and so on. Although that list is almost certainly underestimated, as many existing producers and industrial facilities are going to be seriously looking at carbon capture and potentially blue hydrogen projects as well. Okay, so we're at the end of the webinar now. As I mentioned, the presentation now, as I mentioned, there's a quick reminder about our hydrocarbon and power projects market report. 500 pages of data by country, by segment, 350 plus tables and graphs in it, covering all countries of the MENA region. So if you're interested in this, in the EPC market, the process market, whether that's power, oil and gas, this is essential reading. You can get a $600 discount. If you purchase the report by 6th of August, you've got a code there. You can also scan the QR code to learn more, see some sample pages and the table of contents. And finally, just a quick also reminder about MEED and how it helped your business. I talked about MEED.com and MEED projects before, but now what about I also want to talk about our premium intelligence reports, our events businesses, some big conferences we hold every year, and our marketing solutions businesses, which can also help businesses, help your company. We'll take a quick poll question now. If you'd like to receive any additional information or hear from us about any of these products, you can just put your answer in. I'm sure someone will get in touch to tell you a little bit more. Okay, so we'll now move on to the Q&A session. I see we've got 17 questions so far. I will now look to answer them. First question, are these projects 100% government funded? Are they awarded from a tender process? What percentage is awarded to foreign firms? So when it comes to oil and gas, it's almost entirely funded by the NOC, National Oil Company, i.e. also by the state, out of their own rich cash reserves. They may do some corporate financing, they may issue some bonds, but generally speaking, it's an entirely state-held exercise. Under the constitutions of many Gulf states and MENA states, private sector participation in the production of oil and gas and the processing is prohibited. So it is very much a state-dominated market. However, in terms of tenders for the construction, supply of equipment and goods, or operations and maintenance, then everything is tendered, yes, not publicly tendered in most cases, but it is tendered to registered companies. And as we saw from an earlier table,
a large amount of international participation, both in terms of the equipment supply, but also in the contracting side. So in terms of the biggest contracts, yes, they do go to international funds, companies mainly. Can the GCC source the necessary materials to execute these projects, like steel, stainless steel, I guess, compression vessels, compressors, pressure vessels, and so on? Historically, no. I mean, if you think about it, gas turbines, for example, solar panels, pressure vessels, for the most part, have to be imported into the region. That is changing, however, though, because we are seeing much more foreign investment in the region now coming in to manufacture products locally. This is a result of increased local content requirements, pressure from companies like ADNOC and Aramco for more local content. If your equipment and materials are sourced locally, you do get an advantage in that bidding phase. But also, these NOCs are saying, if you manufacture in kingdom or in country, then we can also guarantee for you a long pipeline of work. So it makes sense. Just this, this week alone, we've seen some big Chinese investment in wind turbines being made into Saudi Arabia. We've seen also investment in solar manufacturing facilities. So this is all changing now, and the region becomes more self-dependent. How do you see the influence of data centers in the future of the power market? Well, it's a very interesting question. Data centers are big right now. There's big investment in data centers in general as the region looks to contain the data within each country, whether you've banks or NOCs or third-party providers of data center storage systems. Then there was hundreds of millions of dollars being invested each year in new capacity. Of course, data centers require a large amount of power, both for the computing power, but also for the cooling, and in many cases are very power hungry. And some of them are using their own captive power, but of course, some of them are tapping into the grids. We have seen some company out of Kuwait, for example, is looking to build one of the world's largest data centers using solar power. And there has been some ideas put forward about dedicated captive solar power facilities for data centers, obviously combined with battery energy storage systems as well. But for the smaller ones, from say 2 to 20 megawatts, then there's going to be a lot of grid connectivity. So that is going to put a strain, but not really as big a strain as from other technology, from other segments of the economy, such as higher population growth, economic growth, industrial concerns, and so on. I'm confused how the oil prices are related to people spending. Oil prices, as most projects in the transmission, distribution, and in the oil and gas space are funded one way or the other by the state, then the more money the government has for higher oil prices, because most of these big NOCs are basically dependent on oil exports, sales, and therefore the oil price. So the higher the oil price, the more money they've got to spend. The lower the oil price, the less money they've got to spend. So clearly, when you're looking at projects market generally, these are important factors. And in terms of people, well, the more people you have, the more higher demand you've got for electricity and for water, and indeed other segments such as social infrastructure and so on. And so you need to build more power production capacity to cope with that additional demand. You also, as a result, consequently need more gas feedstock for those gas-fired power plants, and therefore it's a cycle that leads to more and more investment. Do we have any data where the CCS projects are implemented in GC today? Well, we do. If you use the MEED projects platform, you can see here, then we do have various data on the existing carbon capture projects. But the answer in a nutshell to that question is not very many. Yes, you've got Al Rayeda, which was set up by ADNOC as a dedicated carbon capture company a few years ago, and its first project was on the Emirates Steel existing asset facility. with the pipeline and storage built about a decade ago now. But apart from some carbon capture from some NOCs and some fields, you've got very little to date. Various reasons for that: lack of impetus, regulations, cost, technology issues. The monetization of carbon can be quite difficult as well. So it's been a fairly slow market to date, but this is all very changing very fast. Blue hydrogen requires CO2 capture. For any new field development, there's definitely going to be a focus on carbon capture as well. And most new emissions producing projects are going to have to incorporate it one way or another. How it's going to be done exactly, that's still a challenge. How it's going to be funded, also a challenge, but it is going to have to be done and grow exponentially. How do we meet the localization demand for localization requirements for equipment and materials when you've got limited local resources against so much demand? Well, there's a combination of compromising, but it's also a combination of, well, it's carrot and stick. Carrot in the fact that we've got a huge future demand. It makes sense to invest locally to be closer to the source of projects, but also to help diversify that economy and produce products more cheaply. On the other hand, it does require substantial investment, and sometimes the market size locally isn't sufficient to justify that. However, we're seeing with NOCs and we're seeing with other clients generally, for example, in the Giga Projects program, where they can commit to a very long-term pipeline of requirements, which is encouraging for international investors to come in. So, for example, with wind power turbines in Saudi Arabia can point to 20 gigawatts of wind power projects required over the next 10, 20 years. And therefore, it makes sense when you've got that pipeline of projects for companies to come in and invest in wind turbines as well. So this is all changing very rapidly when you've got this very long pipeline, when you've got the requirement for your products to be created or manufactured locally. The combination of this huge potential market and the requirements creates a very good prospect for or rationale for investment. What's your perspective on nuclear power plants in the MENA region? I think nuclear power is now seen as an excellent way of balancing the uncertainties or vagaries around renewable energy consistency and efficiency during down periods. So I think it's a good way of meeting net zero targets as well. We're seeing already Abu Dhabi look at extending the Baraka nuclear power plant with another 20 gigawatts or 4 reactors. Saudi Arabia, of course, has made it its official policy to build a nuclear power program. We're seeing Egypt, Turkey, and Iran, of course, all in the midst of building their own nuclear power programs. And for many of these larger countries, it does make sense for nuclear power. So there is a drive for that. And that's really, again, going back down to this base load capacity, diversification of feedstocks for power production. But it's there for when, it's for when renewable energy, renewable power is not that consistent. For example, at night when there's less wind and so on. There are so many projects coming up in the renewable energy space out of Saudi Arabia by SPPC, SEC, and PIF. Yes, very true. So we've got the SPPC, which is tending to be the procurer of the renewable energy rounds. Each round is ramping up in size. And we just finished, I think, the 5th round, some 6-7 gigawatts, and we'll shortly start the 7th round. In tandem, we're seeing SEC tender both renewable energy projects and gas-fired power plants as well. And then thirdly, we're seeing the PIF directly award a couple of big solar power projects. I think this reflects, one, this kind of desire to create a bit of competitiveness in that market space, but also it's a recognition that no one company can handle such a vast and rapid pipeline of new projects coming to market. Whether it's the renewable energy round, whether it's the PIF awarding contracts directly, or the SEC also procuring there is a very large pipeline of renewable energy projects, not just in that pipeline, by the way, but also in procurement right now. To identify those, if you want to see the individual ones either are being built or planned, then someone like MEED Projects has all the data that you require. You'll also see a couple of them in some of the tables today in this presentation. Can you please shed some light on the connected grid projects across the GCC, Iraq, and Egypt? Yes, so interconnectivity has been a big thing for a while. We saw the GCCIA, the sort of intra-GCC grid, be connected about 15 years ago. And so countries in the GCC regularly export and import power from each other. And more recently, there's been a drive to interconnect with surrounding countries. So the interconnectivity or interconnection link between Saudi Arabia and Egypt is under construction, as is between Saudi and Iraq, and Jordan and Iraq and Saudi Arabia. This provides some safety net for any power generation issues. So power can go two ways between each country, but also we are now starting to see this between the Middle East and Europe. So connections, say, between Egypt and Cyprus and Greece, for example. And ultimately, the GCC is well positioned to provide electricity to Europe during the winter, when demand is highest in Europe and lowest in the GCC, and conversely, can potentially import electricity from Europe in the summer when demand there is lower to the GCC when the demand here is highest. So it's good potential between each two regions, and has a lot of benefits there. What is the tariff for consumers in industries or data centers in terms of cents per kilowatt hours? I actually don't have the exact figures off the top of my head, but the tariffs for industrial customers is a slab tariff based on the amount of electricity required, generally 3 or 4 slabs, depending on that demand or usage. But generally, these are available publicly for each country, so that it is well known what those figures are if you search for them. Do I have any data on the numbers for Iran? I didn't do Iran in this presentation. However, Iran is a clearly a very substantial oil and gas and power sector market, albeit one affected by sanctions. And for many companies, it's a no-go area as a result. But Iran is building a lot of renewable energy capacity, and rather uniquely, it also has very substantial hydropower capacity as well. And then in the oil and gas sector, well, petrochemicals and gas are very, very major sectors. In fact, we saw a $20 billion contract signed just a couple of months ago for the next stage of the South Pars development with 5 or 6 Iranian EPC contractors. But the Iranian market is becoming more and more resilient and less dependent on overseas equipment and contractors. And potentially, if sanctions one day are lifted, then it offers a fantastic opportunity, and we'll be right there when required, if or when that does happen. We're still monitoring Iran. We still have all the projects in Iran. We're updating those, so we're in a good position to help when that does happen. There's a question here about oil to chemical projects in the GCC. The only oil to chemical projects that I'm aware of right now, and there could be others, is in Saudi Arabia. Aramco has plans for 3 oil to chemical complexes, 2 in Yanbu and 1 in Jubail, I believe. They're connecting to the existing Samref and Sasref refineries, and with the Yasref refinery as well. The idea is that we're going to take liquid feedstock and create petrochemicals from them using a fairly novel technology, while ensuring as few emissions as possible. And again, it's all about Aramco and NOCs in general going down that value chain. The uncertainty for oil and gas may be a little bit unknown and a bit uncertain, but the long-term demand outlook for petrochemicals and the various associated products is very strong and will be for many years to come. So it makes sense for some of these NOCs to start going down that value chain. And also the benefits are you create industries, you diversify the economy, and you create lots of jobs as well. So 3 mega world-scale oil to chemical projects coming up in Saudi Arabia, likely to be in the range of $10 to $20 billion each. And in addition, there's going to be 1 new greenfield refinery being built by Aramco along the Gulf Coast as well. Can you please share the slides? If you've registered for this webinar, the presentation will be emailed to you, or a link to it will be emailed to you, and you'll be able to look at it in your own good time. It's also being recorded and will be uploaded to YouTube. So again, you'll be able to watch that in your own time as well. Is it possible to get tender documents? Tender documents in most cases are not public. In fact, contracts, generally speaking, are not public. You will not find any ADNOC or Aramco tender in the public domain. You need, therefore, to register with them and be qualified and be invited to bid when they come out. As I said, generally, very low visibility on planned future projects. There are some exceptions, such as Kuwait, but generally speaking, there isn't a lot of visibility or details around future oil and gas projects. Different on the power side, a lot of visibility on the future power market. For example, SPPC or SWPC or some of these big clients do highlight their list of projects over the next 5 years, and the tendering does tend to be public as well. So a lot more visibility in the power side. Battery energy storage projects, yes, suddenly this is coming alive as the technology improves. We're seeing some very substantial BESS projects coming, as much as 600 megawatts in some instances. And these are being developed primarily in off-grid remote locations, such as like at NEOM, Red Sea Global, where they don't have the backup of grid power, and where you are going to need that consistency and storage capability. And some of the IWPPs, IPPs themselves in the renewable space will also have battery energy storage systems as standard. So this is certainly something that's growing, so watch this space. I'm running out of time, so I'll just try and answer the questions that I can. Solar has many problems due to the climate of the GCC. I see so many projects, but the problems have not been solved. Well, I actually believe it's the opposite to that. We are seeing solar boom time. We've got, I think, at least 10 gigawatts of solar power projects being built in the GCC, maybe double that across the MENA region. And the Middle East has the best solar irradiation levels in the world, and also has massive amounts of space for the development of large solar power facilities. So you can produce solar power in the region cheaper than anywhere else in the world, and which is really why the region is investing so much in the technology. It is true in the past, issues like dust and sand has impacted panels and reduced efficiency levels. But now the technology exists, and the region is used to this issue by using automated robots to keep the panels clean throughout the day. So this issue has tended to be overcome. So this is certainly something that is also taking hold and making it easier to invest. What is the status of the Safaniya IPP project in Saudi Arabia? Is that by Aramco or SPPC? I can't recall. If you email me, I will be able to get the precise details for you. Okay, I've overrun as usual. Thank you so much for all those questions. I haven't been able to answer them all. I do apologize, but here are my details. Feel free to email me, WhatsApp me, you name it, and we will see what we can do. And otherwise, that's it from me. I hope you found that useful and valuable. Thank you very much for joining us today. And I'll be back on the 28th of August for our next webinar, when we'll be looking at the Saudi Arabia projects market, and specifically looking at all of the sectors there and what is happening in the kingdom, which is one of the world's most exciting projects markets right now. So that's it from me. Thank you very much, and I'll speak to you all very soon. Thank you. Bye-bye.